Thanks for downloading this episode of the Resilient Advisor Podcast. Today, we're starting a new series on the show called the Thematic Investing Series. My partners in this project are Chris Versace, who is the CIO of Tematica Research, and Lenore Hawkins, who serves as the firm's chief macro strategist. They are the co-authors of the book Cocktail Investing and co-host the popular Cocktail Investing podcast. They have been on countless major news outlets, including Fox Business, One America. They've been on with Charles Payne, Cavuto, almost too many networks to mention. They are also really smart, excellent what they do, and fun. I really think you guys are going to like this series. Thanks for coming on the podcast, guys.
Thanks for having us, Jay.
Thanks for having us.
All right, let's get started with 101. What is thematic investing? And I'm not sure who to turn this over to. Who wants to take the lead on that?
That's Chris.
All right. So
that's his baby.
So let's talk about a couple different things, Jay. There's a lot of terms out there that people bandy when they're describing thematic investing. But let's start at the very beginning. Most people tend to think of sector investing. The S&P has 11 sectors, if you will. Okay, fine, that's great. Everything from financials, technology, retail, whatever you're really looking for, they try to sandwich into those 11 sectors. And there's, as we know, there are thousands of companies that are sandwiched into these sectors. So we would argue that that's probably not the best way to think about it. And there's also folks out there that are throwing the term thematic around a little loosely, in our opinion. The way we at Tematica Research think about it, we're looking at the shifting landscapes of economics, demographics, technology, psychographics, throw in some regulatory mandates, and effectively we're looking for structural changes that are going to drive revenues and earnings for companies, identifying the catalysts, if you will, the causality for alpha.
What are your thoughts, Lenore?
Chris, that was a mouthful. So the way we look at thematic investing,
I practiced.
Yeah, you really did. The way we look at thematic investing is to identify those really big picture, massive changes that are driven by, as Chris said, things like changes in psychographics and economics and big moves that don't fit inside just the idea of a sector. Like when you talk about sectors, you talk about like healthcare and tech. Well, what about a company that's a technology company in healthcare? Where would that fit? And when you look at the world through sectors, it doesn't really help you with figuring out how you really want to invest and how you're going to take advantage of these big shifts. So when we look at it through thematics, it's the things that you can see in everyday life. For example, we are all familiar with this move to have a cleaner environment, to have cleaner homes, to have clothes that are not such a harm to the environment, to be eating healthier, to have our cars be healthier, to not pollute the planet and to not pollute ourselves. Where would that fit inside of a sector? So that's one of the reasons we came up with the thematic investing is how do you look at those big shifts and invest in them?
And I think the other great point, just for your listeners, Jay, both RIAs and individual investors, the great thing about thematic investing is that, yes, you can take a look at all the typical data points that people are looking at, whether it's, economic data, industry data, but you can also observe what's happening around in and around the world around you day in, day out. Lenore mentioned, part of our cleaner living investing theme. Just think about when you walk down your grocery aisle and you're seeing more organic shelf space, right? Or products going onto more organic shelf space, or gluten-free or non-GMO, right? There are signs and signals all around you. And that's part of the reason why each week we put out thematic reads, because we capture a lot of that, those signals and data points each and every week.
And are you guys focused domestically here in the United States, or do you guys look at this through a global lens?
So we originally started off looking domestically, okay? However, as we've kind of talked with other, potential partners about what we're doing with our thematics, we've actually been asked to upsize some of our themes to factor in not only a broader array of U.S. and North American securities, but also international securities as well. So, for example, when we take a look at a global cleaner living theme, or a soon-to-be launched index that we have, which will be the Foxberry Tematica Research cybersecurity, and data privacy. Man, I am glad I got that out.
Right. I'm glad you
that
said
index.
It, not me.
Right. So that will be taking a look at companies that are in Japan, are in Europe, and elsewhere. So yes, we are increasingly looking across the globe, because the great thing about these thematics are they're not just U.S. or North American centered things. They're global phenomena.
Mm-hmm. So when you look at current themes that you're looking at, and I want to come back to that index, but you're looking at the clean living theme. What are some of the other themes this year? We don't have to cover them all in the first broadcast, but that you see really driving results. And think about this through the audience of this podcast is predominantly financial advisors and people that serve financial advisors. So what actions could they take from some of the themes that you have right now?
Do you want to go, Lenore?
Well, one that's fairly topical at the moment as we tape this is our safety and security, given what we see going on in the globe. Everybody's probably very familiar with the ETF hack that focuses on just cybersecurity. And that is one aspect of safety and security, but it's only one aspect. We look at it a much bigger picture. That you look around the world and nations and people are becoming more and more inwardly focused on protecting their home, their data, their nations. So when we look at that, it's not just something about cybersecurity, which is just, protecting just your online, are you going to get hacked or credit card's going to get stolen, but also say your privacy as well. That's a little bit different than getting your credit card stolen. What about your personal data? The world is becoming increasingly more datafied, right? We walk around with devices that measure all kinds of very personal things about us every day. Most people have a smartwatch or some sort of a health tracker that monitors not only your physical activity, but it can be monitoring what is probably the single most personal thing, your heart rate. Is that data being protected? Looking at that, not only just is that data being protected, but then what about looking at your home, the data inside your home, but also your home itself, the traditional kinds of ways of looking at privacy.
Right. So, and of course, let me just add this, Jay. And of course, what we're seeing, given the recent skirmish between the U.S. and Iran, of course, there's also that aspect of defense spending, too, that we kind of capture in safety and security.
And also local police forces that we look at as well.
Right. Yes.
So for advisors that are following your research, a couple themes you've already mentioned here, do you also screen out themes to avoid?
That's an interesting question. I think that we do. We may not consciously do that, but I think the better way to think about it, Jay, is when we construct a theme, right? There are companies that are riding the tailwinds associated with that theme, but there are companies that are missing it. And what's a tailwind for one company might be a headwind for another company. So for example, as we're recording this today, we've heard a number of companies talk about their December quarter same-store comp sales, okay? Everything from L Brands to Costco to Bed Bath & Beyond and the like, right? And a lot of these companies are actually reporting negative comps. Not Costco. Costco is one of those companies that we see as helping consumers expand the disposable dollar spending that they have, okay? So Costco is a little different. But when we take a look at these other companies, they are feeling the pinch of the accelerating shift towards digital shopping that is part of our digital lifestyle investing theme. So, we try to avoid the companies that are vulnerable and really focus on the companies that are riding the tailwinds.
We've also been looking recently, we've heard Dean Foods has declared bankruptcy. We've also seen what's going on with Campbell's Soups, that they're really struggling because they're facing the headwinds that come from this cleaner living investing theme.
Right, exactly.
Got it. So how many investment themes do you guys currently have? And then how many do you normally have on an annual basis? And how frequently are you moving in and out of those? There's a lot in that question.
That there is. So let's try and break it down to something a little digestible, shall we? So we have 10 investment themes, okay?
Always? You always have 10, Chris?
For the most part. Now, we're not saying that each theme is active, every single moment, every single month, right? These tend to ebb and flow in nature. But I would also say that generally speaking, most of these are not trends. What do I mean by that? They're not something that's going to be a 3-month phenomenon, right? Like fidget spinners, for example, right? You're not going to be seeing people with fidget spinners today and 3 months later, yeah, whatever, no thanks, forget it. These are, again, structural changes that evolve and happen over time. So our time horizon tends to be on the short end, 12 months. It's more like 24 to 36 months. Again, as this structural shift, this transformation happens. I'll give you a great example. CES, the Consumer Electronic Trade Show, is happening this week, and we're starting to hear a lot about 5G smartphones, right? This follows the soon-to-be nationwide launch of 5G networks here in the U.S. You can't use a 5G network if you don't have a 5G phone. It's really that simple. And this is all part of our digital infrastructure investing theme. This is a thematic slice of our digital infrastructure investing theme. So are we going to see a nationwide 5G build out in 6 months, 12 months, 18 months, 24 months? No, it's going to take several years. And the other great thing about it is that this network is going to be the one that allows autonomous cars to talk to each other. It's going to power the industrial internet, better known as the Internet of Things. So again, a very long structural change coming.
And whereas you would say maybe 5G would be the trend, the digital infrastructure is the theme, because that's a much bigger picture. So it's not just the 5G build out, but it's everything that is going to be made possible by the 5G build out and everything that is necessary for that build out itself.
Right. Yeah, that's a great point. It's everything from chips to data centers, and it's not just 5G. You know, we're going to see Wi-Fi 6 come out fairly soon. We're seeing gigabit fiber being laid to the curb. So it's a number of different things, and I have to say, this is why when we see certain ETF products out there that might just be focused on one of those slices, we think it's a little too narrow, and we question whether it's a product that can stand the test of time or will ultimately have to be folded or repositioned.
Gotcha. Well, first, Chris, I want to give you props for working fidget spinners into this podcast. You're the first one. Excellent. Excellent. And what is Wi-Fi 6? I haven't heard that term before.
We've seen a number of iterations in Wi-Fi, with faster broadband that has allowed for greater programming content to go through, as well as two-way communication. So it's just the next iteration.
Okay, got it. So for somebody that is new to the research that you guys produce, what would surprise them the most, or which theme would surprise them the most as we've rolled into 2020?
Oh, that's a good question. You're doing your homework, Jay. You're doing your homework.
Got to be prepared.
What would be the greatest surprise? So let's see, Lenore. Digital lifestyle, I think that's pretty apparent.
Yeah.
Digital infrastructure, we just touched on. Safety and security.
Yeah.
Yeah, no. Middle class squeeze? I don't think so.
Although I would say middle class squeeze might be one, because you keep hearing in the headlines about how the economy is doing so well.
Good point.
But if you go into the details a little bit more, the numbers of households that have very little or no savings whatsoever, how many households are having to use credit cards just to make ends meet, is pretty astounding. And that isn't happening just in the United States. That's also happening, as you'd asked earlier, are we just focused domestically? That trend where the middle class is really getting squeezed isn't just an American phenomenon. It's also occurring in much of the developed world, particularly in parts of Europe.
So how do you invest in the middle class squeeze?
You look for companies that benefit from that tailwind, right?
Exactly.
What are the companies out there that are going to help consumers stretch their disposable dollars that they do have, as well as what other companies might help them shore up their financial balance sheet? So some examples, we touched on Costco earlier, clearly one. We could talk about Walmart as well. And then on the other side, we could take a look at some of these fintech digital lending platform companies like a Lending Club.
Mm-hmm. And even Amazon.
And yeah, even Amazon. You're right. As you called it. Let me say that. The deflationary Death Star. That's right.
Pushing prices down everywhere it goes.
The
deflationary Death Star. Did you coin that? Yep. Can we give you credit for that?
Yes, I did.
Awesome.
She's one of the one of the great pleasures with working with Lenore is that she turns a phrase almost like nobody else. And, I think the other big one, Lenore, correct me if I'm wrong, was corporate spanks.
Oh yeah, the buybacks, how companies are doing a phenomenal job of managing their earnings by buying back all their own shares, which gives the appearance, because EPS goes up when you have fewer shares outstanding, their EPS looks a lot better, but really fundamentally nothing's improved with a company. And I call that the corporate spanks and push-up bra.
Right.
For those of you who are new to Chris and Lenore, you can see they're a lot of fun. I've already got two great terms: corporate spanks and deflationary Death Star. All right. If you're new to this podcast, I try and keep episodes around 20 minutes so that they're digestible. I don't want to get off this first episode without talking about two things really quick. Tell us a little bit about the index that you guys recently launched.
So the most recent index that we launched is the Thematic Dividend All-Stars Index. And that is a amalgamation of our 10 investment themes as an overlay on top of companies that increase their dividends every year for at least 10 years. So we're kind of taking the power of the thematic tailwinds with the companies that are known to not only pay dividends, but increase their dividends. And what we're trying to identify is out of this collected universe, we want to zero in on the ones that are really poised to ride these thematic tailwinds, because as they do that, they should continue to generate growing revenues, growing EPS, and growing cash flow, and should be able to continue to increase their dividends year in, year out to shareholders.
Excellent. And how could listeners find out a little bit more about that index?
The best place to go for almost everything we do is going to be the website Tematica Research. They could also, if they want, if we happen to mention some of the companies in any of our indices in the NASDAQ Daily Markets note, the disclosures are down at the bottom, and we tend to have links for that.
Every day, Chris and I write a piece for NASDAQ that just talks about here's what's going on in the market today. Here's what to watch out for. Here's all the data and what it means.
And where could they find that piece that you're writing? On the NASDAQ website?
Correct.
Okay. Excellent. Lenore, tell us about the book Cocktail Investing.
Well, that book was birthed when Chris and I first met, which was, we were both speaking. We were up on a platform speaking at a conference, an investing conference in Las Vegas. And he had me at about 2 minutes into, we were the kind of the latter two to speak. He had me about 30 seconds into the first guy speaking, laughing so hard. And we're up there in front of like a couple thousand people, dying, laughing on the inside, tears rolling down my face, trying to control myself because he was scribbling little notes to me. And that pretty much started a friendship that then created a book. And the book, Cocktail Investing, is really about this. It's about thematic investing, but looking at it in a way that is readily relatable, because we distill everyday noise down into investable signals.
Yeah, and we have to give Lenore some props on this, because as we were designing the book and thinking about it, there were certain things that we knew we wanted to have in there, and certain concepts that we wanted really distill down or make really digestible to readers. And Lenore did a wonderful job tackling the various aspects of what an economy is. And it's probably one of those things, if I was left to my own devices, I would have been like, yeah, probably not. But you
talk about bonds with the economy, and Chris starts yawning a little bit. But it's really difficult.
I'm sorry. Lenore said bonds.
Yeah, Chris nods off. The tough thing with investing, when most of us, everybody has a full-time job, how are you going to be looking at investing and making intelligent decisions about what's going on in the world when there's so much information out there? How do you distill it all down into what is actually a material piece of information? And then how do you translate that into an action? So one of the things we did in the book was break down the economy and try to make it a lot simpler to understand. There's just like 3 components of an economy. You have a government, you have households, and you have businesses. So if you look at the economy that way, all right, what's going on with the government, what's going on with households, and what's going on with businesses, that kind of helps you get an idea of where we are in the business cycle, what areas might be doing well, which areas are not. For example, right now, we've got households doing pretty good. You've got the government spending a lot more money, but on the corporate side, we keep hearing about corporate profits in contraction. So that gives you a bit of a framework just to start even looking at the economy overall.
Yeah, and we wind the book up, Jay, with what is it, 11, 12? I can't even remember anymore. The 13, let's say, questions that you need to ask before you buy a stock, and we walk you through everything in terms of the analysis.
Excellent. That'd be useful not just for a retail consumer, but for financial advisors that are building portfolios for themselves.
Totally agree. Totally
Excellent.
agree.
Listeners, you can pick up a copy of Cocktail Investing at Amazon.com. Chris, Lenore, I can already tell this podcast is going to be a hit. You guys are a wealth of knowledge, and we've only scratched the surface here. I appreciate you guys coming on, and we'll see you on the next broadcast.
Thanks, Jay.
Thanks, Jay.